Good afternoon. Thank you for coming to our webinar, a special webinar this afternoon called Is Your IRS Form 990 Telling the Right Story and What Can You Do About it? We're really excited to bring this to you. In case any of you were wondering, we are nerdy enough to have very excited conversations about this issue quite often in our offices. So we're hoping that you'll remember after we get through with the presentation, you can ask any additional questions and we'll do our best to answer them all. To give us time to make that happen, we're actually going to go through to 3:15 to give it an extra 15 minutes for you to be able to ask all of your possible questions. So my name is Ruth McCambridge and I'm the editor-in-chief of the Nonprofit Quarterly. It's a position in which I'm privy to a lot of news stories that reference information that's contained in the 990. It always surprises me what people do and don't do when filling in the 990, because as we've said before, this is probably your most public-facing document. If anyone has questions about your organization, they're probably going to end up going to one of the places in which you can access a 990 to look at what your basic report says about you. It's good to remember that, in other words, that this is a real central reference point for the public. Just to give you an example of when you might use it even for purposes other than making sure that people know your story, we just published a newswire the other day in which 37 nonprofits were told by their funder that they had been cut off mid-multi-year grant. And if they had bothered to look at the 990 of that funder, they would have known, which is March of Dimes, they would have known that that funder had been running serious deficits, seven-figure deficits for many years, and was selling off its buildings and having other kinds of difficulties, which you could clearly see on their 990s. Of course, you might still want to accept a multi-year grant from them, but you might want to back it up a little bit. So that it just gives you an understanding of the many ways in which we can use these really vital pieces of information. In any case, we're very excited to bring you this webinar today. Most nonprofits do fill out a 990, but many of them don't understand the information, how the information on the form can be used to tell a story. Journalists, donors, watchdog institutions, and the government look to the 990 to tell them not just about your organization's financial health, but also about its relationship to donors and board members, its stewardship of funds, conflicts of interest, governance practices, and more. That makes the Form 990 enormously important in a way that is often underestimated. It's worth mentioning that there are also ways now for researchers to actually do research across 990s, which means that they'll pick up stuff that they may be looking for, an outsized salary, fundraise kinds of things. So it's really important for you to keep an eye on what it is that is reflected in this document. We have with us today one of our favorite authors, who is Michael Weiland, who is possibly one of the nerdiest of our writers. Wouldn't you admit that, Michael? He really,
I'm afraid so.
He glories in the details. That's what we'll say. He's a well-known nonprofit consultant, author, speaker, former NPQ consulting editor, and we consult him constantly about issues of law and kind of political process. He's one of those guys who just keeps everything in his head. he particularly loves these kinds of documents. And so he's going to provide you with a very loving romp through what the 990 tells people about your organization. And one thing that you should know before we get started is that it's not necessarily just what it tells you, what it tells people about your organization, but more often it's about the questions it raises. So it doesn't always answer those questions, but it's very good at raising those questions. So I'm gonna leave that to Michael to talk more in detail about. Today's webinar is brought to you by NetSuite. Oracle NetSuite, a provider of cloud-based financial software, is proud to sponsor this. Through its social impact program, NetSuite provides software donation and pro bono services to nonprofits of all sizes, regardless of your ability to pay. NetSuite offers nonprofits a single system for operations and financial transparency and for real-time data analysis. You can share all of this on social media using our special hashtag #KnowYour990. We look forward to hearing from you during and after this webinar about it. You will also know that at the end of this session, you'll see a donation slide. Please remember that we have to depend upon you and your donations to survive. And so the more, if you do enjoy these webinars, if you get a lot out of them, make sure you make a donation at the end of this one today. With that, I want to hand it over to Michael, who's going to talk to us first about all of the various places where all of those journalists who are looking out for any malfeasance are looking up your 990. And then he's going to move on to what are the parts of the 990 that are most critical for you to pay attention to. Michael, take it away.
Thank you, Ruth. I appreciate it. And thank you, everybody, for coming this afternoon or this morning if you're on the West Coast. You're not alone. There are many of you on this call, on this webinar, and I really appreciate it. We all do. The first thing I'd like to do before I dive into the slides is to do a brief one-question poll, kind of just to give me an idea of who's in the audience right now. On your screen, you should see the question, what is your primary professional identification, in attending this webinar? And if you can select one that says nonprofit executive, nonprofit board member, journalist, donor, or other, if you could just, quickly answer, we'd appreciate that. Great, I see a lot of people are voting. Coming up here, we've got, oh boy, great. Okay, I'm gonna go ahead and close out the poll and share the results. Okay, so 55% of you are nonprofit executives or CEO, CFO. 11% are nonprofit board members. That's great. And we've got some journalists, some donors, and 31% are other. Interesting. Don't fit any of the other categories. But that's very helpful. Thank you very much. Okay. As Ruth said, the format for the presentation is going to be first talking about where you can find copies of the Form 990, which, just in case anybody doesn't know, is the annual information return that all nonprofits, including charities, file with the IRS on an annual basis. Next, we'll go into a few examples in the Form 990 of areas you can look at for specific information. Then we're going to talk briefly about the problems and limitations in using the 990. It's a very nice resource, but it's not 100% of everything you need to know, and we'll talk a little bit about why. And then, of course, we want to leave plenty of time for questions at the end. So that's basically where we're going and how we're going to get there. And I encourage you to get your questions in sooner rather than later, so we can have them ready when it comes time for questions. And as you might be able to tell, as I've been told throughout my life, I really have a face made for radio. So don't feel like you have to look at me the whole time. You can just listen to my voice. But go ahead and let's go to the next slide. And Under federal regulation, a nonprofit has to make their last 3 Form 990 returns available to the public upon request. And there are many ways of getting access to that information besides going to the nonprofit itself. GuideStar is one of the most popular, and it was the first online resource to access 990 information. And yes, I said everyone will get copies of the slides after the presentation, so you'll have these web links. So don't worry about trying to copy them down. But GuideStar is one great resource. The Foundation Center has what they call their 990 Finder. ProPublica has what they call their Nonprofit Explorer. Economic Research Institute has a 990 Finder function. You can actually contact the IRS directly and ask for copies of an organization's 990, but note that the IRS itself says it takes 4 to 6 weeks for them to respond to each request. One often overlooked possibility is going to state regulators. There are many states that require nonprofits to, or especially charities, to file some kind of a regulatory filing on an annual basis. Many of them ask for the 990 as part of that filing. So don't forget your state capital as a resource. And finally, like I said, you can go to the nonprofit organization itself. Very few people actually take this route for a number of reasons. I actually had a friend of mine one time who was going to pay me to go to the top 20 charities in my hometown and do that, ask for their 990s and see how many of them refused to give them to me and how many didn't know how to do it, even though it is federal law that they have to. So, you know, most charities and nonprofits just aren't aware that that's a requirement and really don't know how to handle it. But it is something they should know how to do. So fortunately, there are the online alternatives. There's an amazing amount of rationality to the design of the 990, which I know is surprising for some when we're talking about a government form, and particularly one coming out of the IRS. But there is, you know, there is a certain symmetry to it, or there is a certain logic to it. And it's amazing how page 1, it really is the summary page that it was designed to be. There's a lot of different information just from looking at that form, or that page rather, and regardless of why you're looking at the form, whether it's because you're a potential donor or a reporter, or whether you are a nonprofit executive who's looking at your own organization or another organization, page 1 is definitely the place you want to start. And on the next slide, I have an example of page 1 of a Form 990. If we can go to that page. This one is the page for the Susan G. Komen Breast Cancer Foundation, well-known organization. Taking a look at this, this is just the top of the page. We'll look at the bottom of the page in a minute. Not only do you have name and address information, the employer ID number, the telephone number, you also have information like what are the gross receipts of the organization. You know, on the right-hand side of the page, item G, we see at a glance they have $135 million in gross receipts. We also see on the left-hand side in I that it's a 501c3, and below that in J we have the website address for the organization. Then if we go to items L and M, we see that the organization was formed in 1982 and their state of legal domicile is Texas. This can sometimes be very interesting with organizations that operate in multiple states, you know, figuring out which state a charity or a nonprofit is actually headquartered in, because regulation of charities happens in states, not just at the federal level. And so it's often important to know what state laws apply and which state governments you should go to get information about an organization. Scanning down the page, part 1, the summary. This briefly describes the organization's mission or most significant activities. And it gives you the mission right there. Interestingly enough, on page 2, which I'm not going to show, but I'm just going to tell you, on page 2, they ask the question again in a slightly different way, which is, what is the mission of the organization as approved by the board of directors? And if your organization does not have a board-approved mission statement, then you should leave that field blank. And so it's really interesting to see how some nonprofits and charities handle that particular problem, where they have a stated mission or purpose, but oops, they forgot to get the board to approve it. But below this summary of lines 2 through 7B, as you see here, we've got the number of voting members of the board, the number of independent voting members of the board, those that aren't employed by the organization, the number of individuals employed, so how many people are employed. And this is people, this is not FTE, this is actual individuals who receive compensation. Below that, we have the total number of volunteers, and you can estimate that if necessary. And then line 7A and 7B are unrelated business income, which I'm not going to go into in this form, in this particular presentation. But some organizations do have unrelated business income that they actually do have to pay tax on. And this is just a shortcut to take a look at whether or not that exists, and if so, how much of it there is. If we go to the next slide, we'll take a look at the financials on the summary page. And note that the financials include information for the prior year and the current year. So the current year is on the right and the prior year is on the left. And we see revenue at the top, contributions, program service, investment income, other revenue, and then a total. Below that, expenses, grants and similar amounts paid, benefits paid to or for members. There are some nonprofits and charities that are membership based, and members may receive benefit. Below that, we have salaries, other compensation, employee benefits, so you have an idea of how big their payroll is. And then we have professional fundraising fees, and 16B is total fundraising expenses. How much did this organization spend in order to raise the money that it raises? 17 is other expenses, then you have total expenses, and then revenue less expense, whether they made or didn't make money. It's amazing how many people out there still think that nonprofits shouldn't make money. But nonprofit, like any other organization, has a hard time staying in business, if it doesn't at least have a net zero bottom line, but preferably make a little bit of money year over year. So it has things like access to reserve funds. But line 19 will give you an idea of whether the organization is making money or not making money. In the case of Susan G. Komen for fiscal year 2016, they had a bit of a problem because they lost $28 million as opposed to the previous year when they made $21 million. And in this case, you take a look at the revenue, you realize the revenue was cut in half. So it's not surprising that if they're bringing in half the money they did the previous year, their bottom line probably isn't nearly as good. The bottom of the page shows you assets, talking your basic balance sheet information, total assets, total liabilities, and then net assets or the fund balance. And all of this is, like I said, is on page 1. This is the introductory page, so there's quite a bit you can learn just from looking at this one sheet. Whether the 990 itself is 10 or 15 pages or whether it's 400 pages, which is rare, but it happens, you can get a lot just from page 1. We go to the next slide. This is still Susan G. Komen, because I wanted to show you that if you have an inquisitive mind and you're wondering what's been going on with the organization, that it lost half of its revenue or its revenue went down by 50% from one year to the next, Schedule A of the 990 includes 5 years of cumulative revenue and expense information. So we can see from fiscal 2012 through 2016 what the revenues are for the organization. And they actually have, edged up and down over that time, although 2016 is by far the worst year of the last 5. But we also see in 2014, they were at 77 and then jumped up to 105 and then went down to 55. So there might be more of a story here, if you dig a little bit further. And Knowing the news, we know some of the reasons why Komen had some problems during this time, but taking a look at their history gives you an idea, a better idea of what the ebbs and flows of revenue have been during the period. One of the things that is on the first couple of pages, this is page 2, as a matter of fact, of the 990 is a description of key activities. It's one that a lot of nonprofits and charities fail to fill out or don't really take advantage of, because it's really an opportunity to tell your story about what are your programs, what is it you actually do to benefit the public. And if we take a look at that next slide, we'll take a look at the 990 return for Feeding South Dakota from 2016. And this is page 2 of the 990, line 4, 4A through 4E. And I chose this example because they actually filled it out completely. And you can see that their primary program was a food bank in Sioux Falls, South Dakota, on which they spent $10.4 million and received revenue of $719,000. Now that 10 million number includes, in kind, the food, that went out through the door, not just the cash, but still, it's a $10.4 million program. The second largest activity they had is a food bank in Rapid City, South Dakota, on the other end of the state, at $4.5 million in expenses, including revenue of about $280,000. And the third primary program activity, the third most expensive one, is administering 2 USDA commodity programs for the state of South Dakota, on which they spent almost $2.5 million and against which they took 0 revenue. So at a glance, you can get a pretty good idea of what this organization spends much of its time and money doing. And then 4D gives you other program services and it's here just under $7.8 million, which makes up the balance of the 25.2 that's totaled up in line 4E. Now note on 4D where it says other program services, it says describe in section O. Section O, or schedule O rather, of the 990, think of the O as being other, because schedule O is nothing but a series of blank lines into which you can insert explanations for anything that you are identifying anywhere else on the 990. So there are a lot of places on the 990 where it says, if you have a description, put it in section O. And we'll look at section O in a minute, particularly talking about a governance issue. But that's, like I said, this program service page gives you a snapshot of what an organization is doing, how it's spending its money, and what it is doing with that money. And it's really an opportunity for a nonprofit organization to very briefly give a summary of what is it that we do, because a lot of donors, a lot of media people, a lot of the general public say, well, that's nice, you have a mission statement. It's nice that you want to help people. It's nice that you want to do good things. What does that translate to? What does that actually mean? I had a contract one time. I was working with the conservation districts in the state of South Dakota, and I would always hear the phrase about putting conservation on the ground. We could talk about conservation in abstract forever, but putting it on the ground is what mattered, to these district leaders and farmers. Well, this is where you can talk about where you put, that mission on the ground. We're going to talk about revenue and expenses, using it as an example, the Metropolitan Museum of Art, which is a very large organization. And Ruth, did I remember correctly that you had a story about the Metropolitan Museum?
Absolutely. I guess I would like to talk about, I want to go back also and say that, with Susan G. Komen, one of the things that I do as a journalist is track their is to track their revenue, because we're tracking what happens when an organization severely breaks with its constituency. So it tells us a story over time. So it's not just a single year that lets us know, what did this organization do to itself and how.
Mhm.
We watch multiple sources, but one of the primary sources that we watch is that revenue over a period of time, and we'll look into how much of that was publicly raised revenue, how much of it was grants and contracts and that kind of thing, to try to get a sense. But then that's mixed and matched with other information. So again, it's worth thinking about that what you've put in your 990. If you don't answer it, then people will kind of go around and look for their own explanations.
Mhm.
So if you don't say, well, this might look weird to you, but in your Schedule O, people are going to, do their own investigations. The same, by the way, is true with Wounded Warrior, who, as you know, also ran into a scandal, which was kind of like a buzzsaw for it in terms of its donor revenue. Both of them took serious dives as a result of kind of breaking trust, I think.
Mhm.
But with a Metropolitan Museum of Art, this is also a very watched organization. And so, it actually, over the past few years, it's been fighting with the city of New York about whether or not it's allowed to charge mandatory fees for out-of-towners to get into the museum. And so its finances have been discussed up, down, and sideways. If it doesn't explain what the picture of its kind of very complex finances are, without that explanation, you're leaving kind of a vacuum that people can speculate within. So again, it's just I'm reminding you that one of the things that you need to look at is not just what what your responses tell people, but the questions your responses raise. So back to you, Michael.
Sure. And if we go to the next page, um, one of the reasons I picked the Met, not only because it's been in the news, but also it's a large enough organization and diverse enough in its revenue and expenses that we can see how they report the flow of money through the organization in a way that a much smaller organization would not do. Um, for example, we see this is the top half of page 9 of the 990, which is the statement of revenue. Membership dues on line 1B, almost $30 million in membership dues. Fundraising events, they had revenue of $19.5 million. Remember that $19.5 million for events, because we're going to revisit that at the bottom of the page, or on the expense side rather. 12 million in government grants, almost 13 million. And then all other contributions, gifts, grants, and similar amounts, $193.5 million. And then non-cash of 22.6. Then we also see that they bring in money from concerts and lectures and photo rentals and film fees. Next one's interesting because they have investment income. If we go down to line 3, below the program service revenue, line 3, investment income of $38 million, which is really nice. Don't we all wish we had $38 million in investment income? Royalties, 106,000. And then, excuse me, at the bottom of the page here, line 7 is very interesting to me because they list securities that they sold of $738 million and netted $141 million. So this organization had some financial difficulties that they addressed by selling securities, stocks and bonds, and the net for that was fully a third of their total revenue for the year. So they're fortunate. They have a $4 billion asset pool to draw from, and they had that both before and after they sold these securities. But the issue was they had to sell a lot of assets in order to get money to help support the organization in the current year. And they're telling you this right in the 990, right on here on page 9. If we go down to the bottom half on the next slide, We talked about that 19.6 in fundraising income. Well, it's a little bit different than that. We're talking about gross income from fundraising, not including 19.6 million in contributions. So their actual gross income, according to the IRS, is only $700,000, but they had direct expenses of 5.2 million. So according to the IRS, they lost $4.5 million on fundraising events during this 1 year, which is 2014. There's a fair amount of dispute between nonprofits and the IRS about how you count that, because the IRS's view is that if you're not getting ticket revenue directly for the fundraising event, if you're picking up sponsorships or people write you checks because you're holding the event, that doesn't count as fundraising event revenue. It counts as, more general contributions received. So a lot of organizations are having a similar problem to the Met, in that it looks like they're losing money hand over fist on their fundraising events. And this is what the public is seeing on the 990. And so if you are an organization that gets a lot of its funding through special events, through doing galas and golf tournaments and walkathons, runathons, whatever, you could end up having to report results that are far worse than what you think actually happened as a result of holding the event. And this 990 is a prime example of what that might look like. We also have gross sales of inventory, less cost of goods. So they can sell, other assets they have, whether it's art or whether it's physical, capital equipment. And they netted about, $4 million. And then they took in some money from corporate events. They have revenue from their parking garage and from their restaurant. So total revenue is $473 million. But we already noted that about 144 million of that came from sale of assets. So they really had to support their expense budget significantly by selling some stocks and bonds. Fortunately at a profit. But that's, like I said, that's all in the 990. You can look at it. Anybody can look at it and get a snapshot picture of what the organization's finances might look like. Let's take a look at the next slide, which talks a little bit about expenses. I won't go through every line on this, but I will point out lines 5 through 10 are all personnel costs, beginning with compensation of current officers, directors, trustees, and key employees. In this case, the organization spends $8.6 million on those individuals. They also have 122 million in other salaries and wages, plus pension plan accruals and contributions of 16 million, and other employee benefits of 32 million, and payroll taxes of 9 million, which means that they are spending $180 million this year on payroll, including 8.6 million for the senior executives and officers. So, this is a large organization and it's spending a lot of money, but there are a lot of nonprofits out there where one of their biggest expenses, if not their largest expense, is on personnel. So, if your total budget is $1 million and you're spending 600,000 on personnel, it's going to show up on this page. And it makes it all the more important to do things like go back to page 2 and show your program service accomplishments and the expenses for each of those, so you can say, well, we're not just paying people to sit at their desks, we're paying people to do things, to deliver services. And this is how we allocate our budget among the areas of our mission. Because without that information, if all people have is access to part 9 here, where they're looking at the expenses, let's say, my God, no wonder this organization needs more money or thinks it does. It's got a whole bunch of people, they're paying a whole bunch of money, and what is it they do? So it's very important to balance the picture to the maximum extent possible. If we go to the next page, which is the bottom half of the expenses, we'll notice here that they've got 3.7 million in travel, including, if you go to the far right column, that's the column for fundraising expenses. So they have $76,000 travel cost for fundraising specifically. Now, for a large organization with a national or international reach, donors who might live all over the US and possibly around the world, it's not real surprising that they might have travel this high specifically for fundraising purposes. But for an organization with $4 billion in assets, I found it a little bit surprising that they're paying $7.5 million a year in interest. One of the questions that I'd love to ask is, why are you paying much in the way of interest at all if you have assets? This would seem to be an easy expense category to control. But then we have toward the bottom purchases of art, restaurant services and supplies, and other things that come down to that total functional expenses of $421 million. And as I said, let's go to the previous slide for just a second. I know I'm throwing a curveball here. Let's go to the previous slide. We look at the top, there are 4 columns. We have total expenses, and then it's broken out between program service, management in general, and fundraising. And it's important to take a look at all 3 of those as well as the total. But I forgot to make that point, and I really should have made it better. But take a look at all 4 columns when you're looking at the expenses for an organization and how you split out, what is actually program and what is management or overhead and what is fundraising cost. So if we go 2 slides forward, which should be the title slide, University of Louisville Foundation, thank you. University of Louisville is another organization that's been in the news really over the last couple of years. They've actually been in for a couple of different reasons. One, their athletics program because of the Papa John Stadium, which is now renamed. But before that, Louisville was in the press for a couple of years because of the compensation practices and the investment practices of the university, and particularly its president. And the University of Louisville itself is a state-supported institution, but it has a 501c3 foundation and other nonprofit organizations that are related to it. And the foundation is a very important 990 to look at because we take a look at compensation there. If we look at the next slide, we'll see Part 7 of the 990 talks about compensation of officers, directors, trustees, key employees, highest compensated employees, and independent contractors. And note immediately below that said, check if Schedule O contains a response or note to any line in this Part 7. So again, this is a hint from the IRS saying if you want to talk about anything that's included here, Part O is the place to do it and let people know that you've got an explanation. I'm convinced a lot of organizations fill out this section of the form without ever reading the instructions because it tells you a few things that are very important. In what order you're supposed to list your officers, directors, trustees, etc. It also identifies that the top management official and the top finance official are counted as officers, and their compensation, regardless of amount, should always be included in this section of the 990. And one of the most common things you'll see, particularly in smaller organizations, is they misunderstand the rules and neglect to include compensation, sometimes for the executive director or CEO, but almost always for the business manager or CFO. They almost never list that second person and their compensation, and they should always do that, even if that person is getting nothing or $1. It doesn't matter. You'll see Dr. James Ramsey is president. He gets $1.5 million a year from the foundation, and compensation, other compensation from the organization and related organizations of $237,500. So he's getting 1.7, almost $1.8 million from the organization. And one of the reasons why his compensation is so high, besides the fact it's high in an absolute sense, in my opinion, is that Kentucky has a state law that limits compensation for university presidents to $300,000 $300,000 a year. So his maximum salary as university president was set by law. And the market has kind of exceeded that. There are, it is very common for university presidents to get more than $300,000 a year these days. And Louisville solved its problem by saying, well, we're going to pay him out of the foundation. And there's no legal limit on what we can charge, what we can pay him out of the foundation, as long as we can somehow substantiate that the compensation is reasonable. And that's a federal standard, it's not a state standard. So that's what they did in this case. And if we go to the next page, we'll take a look at some of the other staff people here. And particularly, I want you to take a look at line 17 and line 18, which are Kathleen Smith and Jason Tomlinson, because they get money from the foundation, but they also get money from related organizations. And a related organization is what it sounds like, any organization that has a relationship to the nonprofit that's filing the 990, but isn't the same corporation. The most classic example is, say there's an operating charity that has a foundation, and the foundation is a separate 501c3. Well, you can get compensation from both the organization and the related foundation, and that's the related organization line. Going to the next slide quickly, this is the 990 for a 501c3 called University Holdings. University Holdings is an organization related to the University of Louisville Foundation that has a mission to provide management services. And so part of the compensation for Kathleen Smith and Jason Tomlinson that we just talked about, on this form on lines 6 and 7, you see that they receive $51,000 and $41,000, almost $42,000 from University Holdings to supplement their primary pay that they get from the University Foundation. So you can look at not just the 990 for the organization itself, but sometimes that 990 will give you hints saying, hey, you need to look at another organization because this person is being paid by more than one group to do the same or similar jobs. So, and again, this is an opportunity looking at a 990 to see what those relationships might be, and whether there are any hints in there saying, well, yeah, I get X amount of money from this organization, but I'm also paid by somebody else. Okay, well, I want to go look at who the somebody else is and how much they're getting and why. We can take a look at the, this is the compensation report. We've got a subtotal of $3.7 million in base. Below that, total number of individuals who received more than $100,000 from the organization, there's a total of 8. And then take a look at line 4. For any individual listed on line A, is their compensation above $150,000? If yes, they have to complete Schedule J for each such individual. And we'll look at Schedule J in a minute. But one thing I will tell you is that Schedule J is often overlooked by organizations filing a 990. They somehow forget that they have to do that, even though they have people on the board or executives who are getting paid enough to hit that $150,000 threshold and require including that schedule in their filing. And again, as Ruth said, if you can see that somebody's making a boatload of money, but they didn't, the organization didn't complete the Schedule J, you kind of wonder what the rest of the story is about their compensation. Then at the bottom of the page here, section B, were independent contractors. This can sometimes be very interesting, to see what organizations is the nonprofit paying the most money to provide services, and generally speaking, what kind of services are they receiving? In this case, they're getting investment management, legal consulting, and property management services from independent contractors. But there are times when the independent contractors may actually not be so independent after all. They might actually be owned by officers or directors of the nonprofit, and sometimes the information is disclosed on the 990. And if you happen to know who owns the business or where some of the directors might work, you can put together some stories based on that knowledge. And then down at the very bottom, the total number of independent contractors that get more than 100,000 a year, in this case, is 7. You know, it's really fun to take a look at say a hospital or a health system 990, because you might have the total number of individuals getting more than 150,000 a year, or 100,000 a year rather, being like a 1,400, because you have doctors and you have administrators and executives, you know, all over a healthcare system. And similarly, you might have independent contractors that are picking up millions of dollars a year, and you might have 50 of them that are picking up more than 100,000 a year, you know, without a problem. But you're only getting the top 5 listed by, you know, by organization name on the independent contractors, and only the top 24, 25 or so individuals. So, you know, you don't learn everything, but you can learn quite a bit about where most of the money is going. This is Schedule J that was referred to a minute ago. For every individual making more than $100,000, $150,000 a year, we have to report in a little bit more detail where that money is coming from. And so in the case of Dr. Ramsey, we have 303,000 in base, other reportable of 1.2. That can be bonuses, incentive pay, other types of you know, contractual obligated pay. And then column C, retirement and other deferred compensation. He's getting 237,000 in deferred compensation, and a total in column E of 1.7 million. And however, what we have here is, it says in column F that 1.2 million out of this 1.75 million was reported as deferred compensation on a prior 990. This is a problem for nonprofit executives, because the way the rules are written, you often have to report the compensation for executives and others when the compensation is contractually obligated, and then you have to report it again when it's actually paid out. So you end up reporting it twice. And that gets to be confusing, you know, for people who aren't aware of what all the reporting rules are. You know, it looks like somebody's getting a lot more money than they actually might be. So that's a trap that an investigator or a reporter or even a donor might have to think about, you know, before they decide whether or not an executive is being paid too much money. But then we have, you know, the next line, we have executive vice president, you know, Shirley here, until October 1st of 2015. So sometimes you'll see compensation for a partial year. And then again, we get to Tomlinson and Kathleen Smith, where you see base, other, and then columns from, you know, other compensation from other sources. And Schedule J Part 3 gives you an opportunity to do explanations, and the university took the opportunity to make some explanations about why they were paying some of these people as much as they were and the way they were paying them. And if the explanation makes sense, that's great. If it doesn't, it can only get you in further trouble. So make sure that these explanations are readable and that they're logical for someone who might not know your organization intimately. Finally, let's go to Schedule O, the famed other schedule, and we're to look at Avera Health. And this is a $3.5 billion healthcare system headquartered in my hometown of Sioux Falls, South Dakota. It's a Catholic health system, been around for 100+ years. And I was very surprised when I was reviewing their 990 last spring and taking a look at their governance structure. So if you take a look on the next slide, Schedule O is, as I said earlier, is blank. It is literally just, you put the name of the organization, your employer identification number, and then identify what page and what line of the form you're describing, and then you just launch in your description as long, you know, as briefly or in as much detail as you choose. That's all you have to do, and you can have the continuation pages for Schedule O can go on forever if that's what you want. So next slide. In the case of Avera Health, they describe their their governance structure. The organization has two classes of members: sponsorship members and system members. Sponsorship members shall consist collectively of the president and council of the Presentation Sisters, and those persons, as the serving as the prioress and council of the Benedictine Convent of the Sacred Heart. System members shall consist of 6 sisters, 3 Presentation Sisters and 3 Benedictine Sisters. And then you look at the next clip there. The system members have the power to appoint the board of directors of Avera Health and to suspend or remove a director at any time with or without cause. They also have the power to appoint Benedictine or Presentation Sisters to the boards of directors of any sponsored work or ministry of Avera Health. Now, again, this is a $3.5 billion hospital system that the public knows is Catholic, but it also knows that almost all of the board members and all of the executives are lay people. And occasionally you would hear people who know something about Avera say, well, these things happen, but you got to wonder about what the nuns are doing in the background. Well, now we don't have to wonder, because according to their governance structure, the nuns really do control the organization. What people were, suspicious of and gossiping about has been made plain in the 990. Now, the sisters may leave, the lay people alone to run the organization 95% of the time, but the sisters always have the opportunity to intervene with or without cause to do whatever they think is necessary anywhere within Avera Health. And we know that because they said so in Schedule O of the 990. Next one, let's skip the next slide. I know that we're running on time, so let's go to the problems. 990s aren't perfect. There are some weaknesses. One of them is they're sometimes filled in with jargon. The IRS sometimes requires this, but also there are nonprofits that can't resist using their own language rather than plain language to describe who it is, who they are, and what they do and how they do it. There are inaccuracies by filers. They'll put in information that isn't accurate, or they don't interpret the regulations and instructions the way they should. There are bad explanations that are written, particularly in Schedule O. Just because you have a blank page doesn't mean that you should put in, bad information or stuff that doesn't make sense. Sometimes, however, that happens because the organization will let the accountant or the auditor fill out the 990, including all of that text, and the auditor or accountant doesn't know your organization the way you know it, and they're writing from a perspective of compliance rather than a perspective of public information. Use of definitions. There's a gobbledygook here. This has to do with, this has to do with how you account for fundraising expenses when you're doing a public information campaign that includes a fundraising component or vice versa. Under the rules, there are at least 3 legal ways to split out the costs between fundraising and overhead, which means that depending on which organization you look at, if you don't know which rule they're using, it's difficult to know how efficient and effective their fundraising is and where their overhead percentage really is, because they may be reporting their public information as program expense when in fact what they're doing is, they're doing telemarketing or doing direct mail and talking about their cause or issue in part of that direct mail piece or part of that telephone call. And how much of that is really informational, how much of that is mission delivery, and how much of that is fundraising really gets to be questioned, and there is no hard and fast rule on that. Some organizations have very complex 990s, as we alluded to, and also the reader's inexperience or naivete. There's a lot to know about reading 990s and a lot of information to gather, and almost nobody does what this poor nerd does. Every few years, I print out every form and every schedule and every instructions page and put them in a 3-ring binder. So I have them ready for, ready reference, because I'm looking at 990s all the time. Most people don't look at 990s all the time. They look at them very occasionally. And because they look at them very occasionally, sometimes they forget things, and sometimes they don't know everything there is to know about 990s. I know I don't, but anyway, If your information base is shallow, then you're going to make mistakes when reading or filling out a 990. Biggest mistake nonprofits and charities make when completing their Form 990 returns is missing information. You really have to fill in the blanks that need to be filled in. It's amazing how many organizations forget, like I said, the CEO compensation, the CFO compensation, particularly if it's below 150,000 a year. And I have some other examples on the next slide. If we can go to that. 25% of 990s reporting fundraising income report no fundraising expenses, which is inherently suspect. A lot of times, like I said, the top management official, the top financial official, their compensation is not reported, and it always needs to be reported. There are no exceptions. Program service areas, that page 2 area where you can talk about your top 3 program service areas. It's amazing how often that's left blank. How often an organization neglects to mention its related entities. Oh yeah, well, we've got something, but that's separate from us. Well, it's not if you're sharing board members or if you're making loans or grants back and forth. If you're sharing assets or sharing income, sharing resources, sharing personnel, sharing officers, yeah, it needs to be there. And of course, missing schedules. And I see Ruth is coming back on here. So let's do the last couple of slides real fast here, which are, go to the next one here. And this makes the point, in the absence of the facts, as my partner Margaret Sumption says, people will make up their own story. It'll be incomplete, incorrect, and negative. That's why you want to include all the information that's relevant, and your ultimate goal is on the next slide. The ultimate goal is your Form 990 should tell the same complete, accurate, truthful, and positive story that your website, brochures, advertising, etc., are designed to do. Because the general public, including media, donors, and others, are going to be reading your 990, and they're going to be noting the discrepancies. And every discrepancy raises a question, and every one of those questions has the potential to be skeptical. So you really want to pay attention to how that 990 is written. And that's what I have in the way of slides, and I'm ready for questions.
Okay, well, there's a lot of them. I want to add a few no-nos to what Michael said. Don't fill your 990 out longhand. Don't think you can anymore, but
we've seen those.
And don't repeatedly say, "I don't know what I'm doing, but I hope you'll forgive me." It's not. It doesn't inspire confidence. I don't know how many statements like that I've seen on 990s over the years. So there was one question that got asked over and over again. I hear it asked a lot, and I think there's a very simple response to it. And the question is, what do you do when your revenue looks completely erratic because of multi-year grants? Either multi-year grants or basically developing enough money to do a number of things that you're going to use that money for over the next few years. So it can look like you got a lot of money one year, and then the next year everybody lost faith in you and you overspent. I think there's a pretty clear answer to that, but can you walk people through what they should do when they have those kinds of anomalies in their on their 990s?
Well, I think the bigger issue is you try not to have those anomalies by not relying on a single grant or a single funding source to the point where if you lose it, all of a sudden you have an anomaly. The idea is to be constantly trying to raise revenue from diverse sources, so that you're not overly dependent on a single source. And it is difficult on the 990 because grants and contributions are listed together pretty much everywhere on the form. So if you are heavily grant dependent and you get to the end of one grant and don't have others to fill the gap, then yes, it's going to look like you're all over the board. even though your bottom line may be positive because you get rid of the grant funded personnel and you don't do the grant funded program anymore. You do other things that fulfill your mission and still have a break even or positive bottom line.
But I
So
think
go ahead. Go ahead.
the multi-year grants is a particular problem just because of the gap requirements that of when it's that you can't spread it out in some circumstances.
Right. Right.
So
And that could be an opportunity for Schedule O explanation as well.
Exactly. And I think that people should really think about where would questions be raised? I mean, if you're looking it over, it makes you feel uncomfortable about what people will take away from that. You can very often just put a note into Schedule O, make sure that you explain what it is that's happened.
Right.
So another question is that if somebody asked a question that if you believe, and these two are related also. One person asked, how do you reflect the right ratios in your fundraising, management, and program expenses? And this is really quite a political question. So can you talk a little bit to that, Michael?
Well, I mean, I think that, rule number one is you have to be honest. You are filling out a form and filing it with the federal government under penalty of perjury. So rule number one is you have to be honest. And I would never advise anyone to do anything that isn't honest, particularly when filing a federal form. I think that scrupulous accounting for all expenses and being able to properly identify what's program, what's fundraising, what's management in general is key. I think that I also think that there is a slowly emerging understanding that the overhead myth is that it's a myth, that there is a proper balance. There's almost a Goldilocks and the three bears kind of approach where an organization can be too thin or too fat, or it can be just right. But the key is to be honest about it and simply accept the fact that yes, maybe when we're a new organization, we're spending a lot of money on administration because we're bootstrapping ourselves. Maybe we're able to be very, very lean because we're an incredibly large organization that has a large endowment. So we don't need to spend a lot of money on personnel or personnel development. Different organizations in different parts of the life cycle have vastly different overhead percentages and allocations, and it's just a matter of owning that. And yeah, some donors are going to have to be educated about what that means. But Ruth, what would you suggest in addition?
I mean, I'm an advocate of being honest because I think over the years, and I've been around for too many decades, or I'd like a couple more, but it's been a lot of decades that I've been around. That over the years, people got so used to trying to underestimate their fundraising expenses and underestimate their administrative expenses and overestimate their program expenses that there was no longer any standard that anyone could use. It was all false. No. And that is a very tough situation to put the entire sector in. I think the assumption that there are ratios which are firm and fixed and don't vary with the type of organization is really, it's unfortunate. It's Clara Miller has always said it's kind of like walking into a hotel and asking them how much they paid for their sheets. It doesn't really matter how much they paid for their sheets. The question is that experience going to be a good experience? And the question for nonprofits should be, are they providing value for the money that the organization has? So it's a little bit of an infantilizing of our sector that happens in that, that kind of traditional monitoring. So I'm all about just telling the truth. There are things that people use that have gotten them into trouble, and I'm going to blank on some of the terms right now, but there are allowable amounts of fundraising under certain conditions that can be attributed to public education or program,
Right.
and that kind of thing. It's very important to know what exactly the rules are around that so that
Mhm.
you're not violating them, because that's how Wounded Warrior, I think, got into a lot of trouble, and where a lot of questions were raised around them.
Do we have a couple more questions in the 5 minutes or so we have left?
We do. Somebody asked, if we go dormant, do we still have to file?
Uh, yes, you have to file something. You may have to file a 990. You might have to file a 990 EZ. If your revenue is under $200,000 or your assets are under $500,000. If you go completely dormant and you have next to nothing in your checking account and nothing in your savings account, you can file a 990N, which is called the postcard return, but ironically is not a postcard. It has to be filled out online. But there has to be an annual filing of some sort every year. And even if an organization decides to dissolve, it has to file a 990 in the last year of its existence and notify the IRS on page 1. One of the fields is what type of return is this, and you can check a box that says dissolution. So there has to be a 990 filed every year. It doesn't necessarily have to be a full form, but some version of the form has to be filed every year. If you don't file for 3 consecutive years, you are liable, you will lose your tax exemption. In fact, I wrote an article for NPQ in the summer issue of the magazine talking about the almost 800,000 organizations that have lost their exemption solely because they didn't file for 3 years in a row.
Okay, so another question that somebody asked is, how do you reflect donated time and in-kind goods? Where are those reflected on the 990?
There is a schedule on the 990 for non-cash contributions. So if you're talking about donation of say like food for a food bank, medicines for an organization that distributes medical services, there's a schedule on the form to do that. Volunteer time is a lot tougher because it's very difficult to value volunteer time. You can put almost any value on it you want. We've all are familiar with Urban Institute taking a look at Department of Labor median non-farm income as being the standard. But currently, about $25 or $27 an hour? But that's an arbitrary number, and you can't deduct the value of volunteer time on your individual income tax return. And for an organization, it could be very valuable to know how many volunteers you have and to know how many hours you have just as a expression of support for mission. But as far as declaring it on the 990, you might put it in Schedule O, as an other support number. But that's different from non-cash contributions of goods. So I hope that answers that question.
So, Michael, I wanted you, if you could just spend a couple of minutes on the page that asks governance questions.
Okay.
And, I want to, before you start, I just want to indicate to people that I always read the answers to those questions. And sometimes the answers that I see.
I told you I always have them printed out. So
Yeah, sometimes the answers that I see raise additional questions. So for instance, the other day I was looking at someone's 990 and there is a question in there that asks how did you approve the 990?
Right.
And what it said basically is the executive director and the CFO approved the 990.
Yeah.
The executive director is also the chair of the board. But what that means to me is the checks and balances in that organization are abysmal. So, that really there, we would have a problem in feeling very confident that this has been, kind of arm's length understood by anybody and questioned. So those questions are incredibly important because they do indicate fairly clearly what an organization's view of the role of governance is. So can you talk a little bit more, because these questions are relatively new, not incredibly new, but relatively new on the 990, and they are pretty revealing.
Yeah, the IRS started putting these questions on the form in 2008, and the the goal was to get an idea of the governance practices of organizations, because the IRS believes that good governance corresponds to good financial management and good stewardship. The IRS does not directly have the authority to regulate the governance of nonprofits, but it still wants to know how an organization is governed, because it could be an indication of other issues or other problems. And this is part 6 of the 990, which is on page 6. It asks about the presence or absence of policies, and including, as Ruth talked about, how the 990 is reviewed and approved, or whether it is prior to filing. And there's actually a dispute among legal people, and I'm not a lawyer, I'm not an accountant, I've just been a consultant for almost 30 years doing this. But there's a dispute as to whether or not you should declare that your board has reviewed the 990 prior to filing, because a lot of times there are last minute changes that are made after the final version, or excuse me, after the version presented to the board is reviewed. There might be some last minute changes, even if that only includes the addition of signatures. So some say don't do it. Others say, yes, you want not just your finance committee, but you want your entire board to review it. I personally think the board should review it because it's much more than a financial document. It's much more than a compliance document. It is a public information and public relations document, and it really tells the entire story of the organization. And everyone, staff as well as board, should have the opportunity to weigh in at some point on this, because it is public information anyway. However you describe it, however you describe that process, describe it in such a way that it makes sense and is respectful of the public interest, in the organization and how it's run.
Yeah. Okay, and with that, I'm going to, because we are beyond time and I have so many more questions, I'm so sorry that we didn't get to all of them, but we will figure out a way to set up a session for just those questions later. I do want to suggest to you that you go through a few 990s that are not your own organizations, 990s, maybe about peer organizations or organizations that you're interested in, and just note for yourself where their responses raise questions, because it's sometimes hard to understand when it's ourselves that we're actually raising issues. The importance of this is that we do want to tell that, a coherent story, but we also want to inform ourselves about, if something does look odd, if they ask us a question, that we answer, oh yes, well, I'm the executive director and my daughter-in-law, true story, this is I read just the other day, is the CFO. It's a problem. So it's just, we believe that, okay, we've kind of put it through a board process and whatever. The way it looks to outsiders is something extremely different. And if we're raising questions to outsiders, we have to be honest. But if we're raising questions to outsiders, that's the point at which we need to start questioning our own practice. And just, take ourselves on, perhaps, at the board level. So with that, I'm going to thank you all for coming. The number of people who are still with us is amazing. And thank Michael Weiland, who please go to our website and look up what he's written for us over the years. It's a phenomenal, trove of resources. And we will see you again soon. Don't forget to donate. See right underneath my picture right here, it tells you how to donate. Remember that we are yours. We want to be responsive to you, not to anyone else. So the more you can kind of own us, the better. Good afternoon and have a wonderful rest of your day.
Thank you, everybody. Thank you, Ruth.